Wall Street's dip, uncertainty looms over rate cuts. The stock market took a slight tumble on Thursday, leaving investors scratching their heads about the future of interest rates. But here's where it gets interesting. While some economic data points to a strengthening economy, other indicators suggest a potential slowdown, creating a confusing picture for the Federal Reserve. Unemployment claims dip, but CarMax takes a hit. Initial jobless claims surprisingly dropped, indicating a potentially tighter labor market. However, CarMax, a major used car retailer, saw its stock plummet to a 5-year low after reporting disappointing quarterly profits, raising concerns about consumer spending. Economic growth revised upward, but inflation worries persist. The U.S. economy grew faster than initially thought in the second quarter, fueled by strong consumer spending and business investment. Yet, Chicago Fed President Austin Goolsbee expressed unease about cutting rates too quickly, citing inflation as a lingering risk. This highlights the delicate balance the Fed must strike between stimulating growth and keeping prices in check. And this is the part most people miss. While lower rates can boost borrowing and spending, they can also fuel inflation, if not managed carefully. Investors await crucial inflation data. All eyes are now on Friday's release of the Personal Consumption Expenditures (PCE) Price Index, the Fed's preferred inflation gauge. This data will be crucial in determining the likelihood of further rate cuts. Tech and energy buck the trend. While most S&P 500 sectors ended the day in the red, the energy sector gained ground, and the technology sector eked out a slight increase, thanks to a surge in Intel shares following reports of potential partnerships with Taiwan Semiconductor Manufacturing Company. Valuations high, but tech giants may get a pass. Investors are closely watching corporate earnings reports, especially with stock valuations considered high after recent market highs. Rick Meckler of Cherry Lane Investments notes that while valuations are historically high, the government's apparent willingness to allow big tech companies to grow even larger could be a positive sign for the market. Divided opinions on rate cuts, the Fed's path forward remains uncertain. While some policymakers, like Stephen Miran, advocate for aggressive rate cuts, others, like Goolsbee, urge caution. Fed Chair Jerome Powell emphasizes the need to balance inflation concerns with a potentially weakening job market. What's next? The upcoming U.S. jobs report next week will be another crucial data point for the Fed's decision-making process. Food for thought. With conflicting economic signals and differing opinions within the Fed, predicting the future of interest rates is a challenging task. Do you think the Fed should prioritize fighting inflation or stimulating economic growth? Share your thoughts in the comments below.